us now, and he's going to be talking to us about HDB Financial results. Recent listing, how did the numbers look, Gaurav?
Well, when we talk about Q1 numbers, they actually look a little weak, and there are two aspects to that. First is when we look at disbursements, they have come down almost by 8.5% on a year-on-year basis. And second is credit cost has inched up, and that is the reason when we look at the profitability, there also we have seen a decline on a year-on-year basis. On the other hand, when we talk about net interest margins, there we have seen an uptick, which is actually positive for HDB Financial. So first, let's look at the numbers. Net interest income has increased almost by 18% on a year-on-year basis. This is again reflected in its net interest margin, where we have seen an expansion. Let's not forget that management has also said that there will be another expansion because the 100 basis point of fall in the repo rate is yet to get picked up in the results, and that is the reason they are actually a little optimistic about net interest margins. On the other hand, PPOP growth was also healthy. What happened is that the credit cost actually inched up almost by 10 basis point. It is now at 2.5%, which actually puts some strain on the profitability, and that is the reason when we look at profitability, it has declined almost by 2.5%. Another reason for management to believe that the ROAs can go up is that they believe from Q2 onwards, the credit cost is likely to ease up. We may see stable credit cost in Q2, and from thereafter, we will see credit cost coming down. Let's not forget, for FY25, we have seen credit cost somewhere in the range of 2%. So again, management has not given any kind of guidance, but that is the optimism that management is building in. And on back of that, they believe that ROAs will also improve. But for now, on the back of weak results, we are seeing the stock is actually struggling in trade today.
Thank you so much, Gaurav, for joining in and telling us why exactly HDB Financial Services is under pressure today. Well, moving on, network